Hello, everybody. Welcome back. Today is all about BASIC. I sat down with the Blockstream guys to talk all about their financial product, their Series 1, their learnings, and what's new for Series 2. Stay tuned. All right. Like I said in the introduction, I'm here with Mr. Macedonio. Hello, how are you?
Hey, Jesse, how you doing?
Very good. We wanted to record yesterday. I just said to you, we're meeting exactly 100 blocks later because we just ended up having a good discussion instead and it didn't actually hit the record button. And yeah, I mean, with Blockstream, there's, I don't know, more topics to discuss, I think, than I can count on one hand. So this is probably not going to be the last time. Today, we would like to discuss the basic note. It's a note, right? It's what you've termed it. Was it?
It's a no.
Okay.
Yes.
Right. So, but before we start, we are at block height 831.402, and we are at 566.3 exahashes. I swear that was 40 less yesterday. And then we are at $81.6 per petahash per day. So yeah, before we get started, maybe give us brief background to yourself, James, to those folks who have not seen you before, and how you got to Blockstream, what you did before then, and yeah, as much as you want to share.
Sure, Jesse. Yeah. So I'll try to keep it brief because I've been around a long time. Primarily, I spent most of my career on Wall Street in the technology group. So I spent I actually one of the first to bring Windows to the trading floor, and then I moved on to electronic trading, low latency, high frequency trading, and then from there I moved into clouds. So you see, my career kind of follows the most disruptive technologies. So I spent a lot of time at Bear Stearns, Credit Suisse, Morgan Stanley, their traditional investment banks. And then from there, I went to Amazon, spent 6 years at Amazon, AWS, and got a good background in cloud. When I was looking to move on from Amazon, I'm like, what else can we get into that's disruptive? And cryptocurrency and specifically Bitcoin was next best thing for me.
How did you stumble over? How did you stumble over the white paper you stumbled over first?
Well, my wife was in the industry, so she was marketing for a cryptocurrency fund, and I had Blockstream was trying to recruit me. So I thought, with encouragement from my wife, she said, "Why don't you step over to the dark side, come over here to the cryptocurrency world?" And I did. Yeah.
So really, it found you instead of you finding it. That's the first I think.
It found me. Blockstream was looking for someone to help build the organization, specifically the sales organization. And my career has always been building, right? So I moved. I adopted all the newest technologies, and I always built groups around that. And now I'm here doing the same thing for Bitcoin.
And so, how long? I mean, you've got insane knowledge on the mining sector as it stands. How long did it take you to make that transition? Was it like learning a language similar to one that you have spoken before, or was it something completely new?
No, because my wife was in the industry, I was learning the terminology already. The hardest transition was really more understanding the energy market than anything else for Bitcoin mining. Right, understanding all the calculations around kilowatts and megawatts, and and how that feeds into hash rate and what you can do with it. Yeah, that was probably took a little more time than just understanding Bitcoin.
Yeah. Okay.
And plus, I had for the Bitcoin piece of it, I had the best teacher out there, Adam Back.
Yeah, I was just gonna get to that. I mean, the guy's somewhere in there. There's probably not a better source to learn proof of work from and anything that's connected to it. Plus exactly. a lot of room for innovation and trying things out. yeah, I mean, it's a perfect match. And I think it's also curious that you come from sort of a more traditional business background and come into it and bring that angle. Like you said, they look for somebody that can build the organization. And usually, usually the reason why I love working in this space is that usually you have to deal with people that are very very aware of the fact that they don't know much of anything when it comes to Bitcoin, or that they don't understand everything, right? And everybody sort of brings in their angle, because nobody goes to learn Bitcoin at the university. Everybody brings their marketing or their business acumen, or I don't know, their innovation, their ability to speak, to write to the table, and it sort of creates this very productive space where you can get a lot done, and speak to people who can make decisions quite quickly. So
Yeah, well, I think my financial background was really an added benefit, right? A lot of the big enterprise firms are still trying to figure out if they should be adopting it or not, right? So they may not be holding Bitcoin on the balance sheet, but what they are doing, investing in companies like the Marathons of the world, as a way to enter into the market. So I have quite a few relationships on the Wall Street side of the world, and I think bringing that knowledge into Bitcoin world, which is still in its infancy, and has a long way to go to mature. I mean, there's so many things we can do with building financial products off a hash rate. The BMN we have out there, and not only just hash rate, but even what we're doing with the basic node. So my Wall Street background, I take that creativity and build it into products.
yeah, I mean, it's not even where you started, right? You started with the BMN Blockstream mining node. Maybe we can cover that another time. That's sort of a financial product around mining, which I covered like in 2021 in an article where I compared Compass mining to the Blockstream mining node, and how it sort of added up for investors and stuff like that. Because one thing I sort of noticed is all of us found Bitcoin, or were found by Bitcoin, because there is a inability to sit still for many of us. So we try things out, we want to move, and anybody that has a decent knowledge about Bitcoin and owns some at some point will think about, hey, should I start mining? There are options out there. And at that time, the BMN
yeah, and mining, and actually doing direct mining could be cost prohibitive for a lot of folks.
Exactly.
So the BMN is a way to enter into the mining.
Yeah.
To get into mining without all that hassle, let's just call it.
Yeah,
obviously, miners and finding a place to host it and so on. So it's a simple way to enter into the mining world.
That's it. Yeah. No, but as I said, let's cover that another time. This basic Blockstream ASIC node, right? Is B stands for Blockstream, I am assuming.
B stands for Blockstream. Yes.
I mean, you guys have done content around this, right? I remember seeing you on Preston Pish exploring this. You also did your own sort of little YouTube interview with Anna from Stocker, where this is hosted as well. We don't have to cover the basics in detail, but maybe to explain to folks in like 30 seconds what the basic node is. Do you want to give them a brief rundown?
Sure. So as the Bitcoin industry has gone through some turmoil over the last few years, right? You have a lot of companies that went bankrupt, and a lot of companies that used to finance machines, also had trouble as well. So what that ended up doing is putting a lot of ASICs back on the secondary market. And what used to be the ASIC market ASIC prices used to be highly correlated to Bitcoin price. So if Bitcoin price went up, usually it was like a 2-week lag, and then you saw ASIC prices going up. So ASIC prices at the height of Bitcoin, ASIC prices were at about $120 per terahash, which is huge. You can buy that same machine today for under $10 per terahash. So it's a huge differential. But Bitcoin is getting close to where it was at its high, right? So it was just another 15K or less than 15,000 away from its height. But the ASIC markets haven't moved. So the correlation between ASIC pricing and Bitcoin price has broken. And we do feel, Adam and I feel like there will be a huge price correction coming. And I think right now the ASIC prices are staying fairly flat because of the fear of the halving. But after the halving, we're expecting a Bitcoin bull run, right? Which historically has done, which will drive the price back up. And also there'll be a lot of people hosting are refreshing their units. So we feel that the demand for the more efficient machines are gonna go through the roof.
Yeah, I have to.
So our thesis is built on that price correction.
Yeah, I just put a marker here to make sure that we put the ASIC index, the Luxor ASIC index, up on the screen here. Because what's curious is also the premium has diminished completely between higher efficiency ASICs and lower efficiency ones. Right? They're sort of all similarly flat, but the space in between them has diminished, right? So it's now in relation much cheaper to buy
exactly.
more efficient units.
I can share the Luxor.
I'll put it up. I'll put it up on the screen, and we know what it looks like.
Okay, great. Yeah.
That's really curious. I think and invites ideas such as the basic nodes to sort of come to fruition as well, because it's at the end of the day, it's a play on buying and storing ASICs, right? Which we'll get into now. But where I was going is that I think when the Bitcoin price goes up, we will see some units increase in price much more than others, right? And that's where you make your purchasing decisions as well, I'm assuming.
Yes, exactly. We're looking to anything under 25 joules, which will be targeted for Series 1. For Series 2, we'll work with the the industry brokers and so on, and we'll figure out what is in hot demand and what is good, bang for the buck. Let's just call it, right? It's not always the most efficient machine, not always the best bang for the buck, but we do want to stick with the more efficient machines under 25 joules.
Yeah. Maybe let's talk about Series 1 a little bit, James. Like, sure. What was the plan and what was later executed in Series 1? Can you say a little bit about that?
Sure. Now, we've been in each series, we're looking to raise about $5 million. And when we hit that threshold, we'll deploy the capital to buy miners. So for Series 1, we end up purchasing a 3,000 plus S19Ks, which were, when we did analysis of the market, Adam and myself, the Ks were in great demand, and also they were established machines, right? That we didn't have to worry about them failing as much, right? The alternative could have been like an S21, but S21s and had some issues, and we rather just go for something that was proven in the market, and the Ks were on top of the Ks had a really good bang for the buck from a price perspective.
There was a plan to diversify across models, I remember. Why did you not end up doing that?
I think we're each series we can diversify across models, right? If a really good opportunity presents itself, that we can't turn down. If we have a tranche of machines out there that are extremely cheap, that fall into our criteria on the 25 joules, that we may look at it. It is much easier, right, for each tranche to stick to one machine type, because when you value the note, you don't have to price out multiple different type of machines. So for a transparency with an investor, right, we just have to maintain the updated K prices. Mm-hmm. But if I had 5 different type of miners in there, it would have been a little more complicated to show the value of the note versus where it sits against Bitcoin.
Okay, so walk me through the process, James. I want to invest, right? I don't have rec space. I want to have exposure to ASICs as a derivative of Bitcoin price. what do I do? Like, how do I get there?
Well, you can go to the Stoker site and you can register, right? You need to be a qualified buyer. We don't offer to U.S. investors just yet. Series 3, we're working on that, where U.S. investors can get involved. So through Stoker, you go through the registration process, and the minimum purchase is 115,000 USD. And it's as simple as that, right? And a lot of folks are investing with Bitcoin, so it's really a Bitcoin and Bitcoin play. And the alternative is hold Bitcoin but if you're holding Bitcoin already, this gives you an opportunity to potentially make a yield above Bitcoin, right? Because we're expecting the X factor, the ASICs, when we see a price correction, to move faster than Bitcoin price.
Okay, and when would you sell the machines?
Well, the optimal would be selling it as high, right? The trick is, when would that be? We're anticipating quite a few things correcting in the market, right? We're expecting that after halving, right, things will start stabilizing. We'll see a bull run on Bitcoin within 6 months after halving. Financing units out there have been pretty challenging. You can't find anybody to finance units, but I think that market will start coming back. In the last few years, hosting capacity has been challenged as well. There's been a lack of capacity. New capacity is starting to come on. A lot of the public miners are scaling vertically, right? So that took a little time to scale vertically, but their facilities are starting to come online. Even the hosting providers are bringing new capacity on. So that is so now the customer's going to have a place to plug in, right? Previously, even if you bought machines, you wouldn't know where to plug them in. So that kept the inventory high in the secondary market. But all that is starting to dry up. So we're expecting probably towards the end of this year, we would see a price correction on the more efficient machines, right? And we're also expecting, obviously, Bitcoin to be way up there as well. So we're hoping to see upwards of a 2x gain over Bitcoin appreciation with ASICs.
Okay, so
and there's a lot of other factors. Yeah, there's a lot of other factors, Jesse, that may play into this, right? You have Taiwan, that if something was to go south there, right, chips are going to be in shortage, right? And if that's the case, then it's going to drive up the ASIC prices as well. So we're expecting to see a huge price correction, I would say, in Q3, Q4. So that's when we'll really be watching for an opportunity to sell the units that we've been storing.
Okay, but you mentioned the 2x target. Does that mean if I invest a Bitcoin, I know it's not 115 right now, but I'm assuming this financial product will also be tradable on SideSwap, I believe is the name. Is that going to be the case this time or not?
Correct.
Okay, so if I take a Bitcoin, I buy BASIC on SideSwap, and I hold it, then the goal is to have a 2x, and when the 2x is hit in Bitcoin terms, then it's sold and paid out minus, I guess, fees.
No, it'd be 2x. We're expecting upwards of 2x of what Bitcoin appreciation would be, right? So the ASIC pricing will have to have a much larger X factor.
Yeah.
Right. And there'll be no carry on the note if the ASIC note does not beat Bitcoin appreciation. So if Bitcoin appreciates, let's say 50%, and the ASICs only appreciate 50%, there'll be no carry on the note. But we're expecting the ASICs to appreciate at a much faster rate when we start seeing the correction than Bitcoin price.
Okay, but what I'm trying to get out of you, James, is with the BMN, there's a trigger, right? There's a date at which all the mined rewards will be paid out. Is that similar
Correct.
here, or are you saying that the trigger this time is a certain increase in value?
Well, the note it's a 2-year note, but the trigger is something that we stay close to the market and we have to figure out when the best time to sell is.
Okay.
Right. So it's not going to be at the 24-month mark and say, okay, now we're going to sell all of the miners. We may incrementally sell, right, just to reduce some risk as we see ASIC prices increase, right? But it may be 18 months into the note that we decide, hey, we think we see the height of the ASIC prices, and we now want to sell off our inventory.
Okay, so where do you
Right.
see the risks? Where do you see the risk? I mean, from where I'm sitting, I take it you guys, because you just mentioned the lingering conflict around Taiwan. I'm assuming you guys take delivery in the US and store them in a warehouse, right? So
Well,
or is that a misconception?
no. Well, that's the intention is to eventually store them in a warehouse. But working with the manufacturers and some of the brokers that I do business with, we are able to delay delivery
Okay.
of the units, so they're not leaving the manufacturer. And what that does for us is a couple of things. The warranty doesn't start depleting if we don't take delivery of it. We don't have to worry about warehouse costs or insurance on the miners if we don't take delivery. So, for example, we bought the S19Ks February batch, but through the market, I could actually sell the K batches, the February batch, and purchase a March or April batch, and delay delivery, right? So, or I can choose to say, okay, there's too much risk out there, and I don't want to have to worry about getting the units. So I'm going to choose to now take them and warehouse them in the U.S. So
Okay.
again, that's another decision that we need to make as we go along.
Does that not then also add counterparty risk? If you're buying ASIC futures, that delivery is not possible for whatever reason, or I don't know. Yeah, I mean, it's just another party that's then connected to the deal, right? I'm just trying to understand, nothing is risk free, and I'm just trying to understand where they are.
Well, yeah, and nothing's risk free, but it is a risk, right? And that's something that we do monitor, and we do need to make sure that we're minimizing that risk as much as possible. So if we're anticipating that the price correction is going to be somewhere at the end of 2024, we have quite a bit of runway between now and then to have to worry about taking delivery.
Mm-hmm.
Now, the risk is, which I think is small, that if in April, we see the height of the ASIC price, then we have to worry about getting machines in a short period of time. But I don't think that's going to happen. Right? I think that risk is very minimal.
Mm-hmm.
So we're really timing it. I think a best case scenario would be taking delivery of machines, 3-4 months before we feel like the price will be at its high.
Okay.
Right. To minimize, to minimize that risk of not having delivery.
Yeah. All right. Okay. So
that's where working with Blockstream is an advantage, right? Because we're tightly tied to the industry.
Yeah,
right. The manufacturers, the brokers, the demand out there, and it's our expertise that we're able to make these kind of very calculated decisions to maximize the profit. Now, if I was to take delivery of the February batch now, I would start paying warehouse costs, insurance costs, and I would have, and the warranty would start depleting.
Yeah.
So we think the risk of keep pushing it into forwards is worth that at this point.
Okay.
But now when we sell off the inventory, they'll have more of the warranty, and we would avoid quite a bit of cost for the note.
All right. So to sum up, I register on Stocker.
Yes.
I give you guys Bitcoin. You buy machines. You buy futures. You essentially trade them and make a yield on them because you know how the market works, and you have access to all the right people to make this a profitable adventure. And so it's a 2-year note, and whatever sort of yield on top of the purchasing I did back 2 years ago is what I get on top of my Bitcoin. Is that sort of roughly summed up correctly, or did I miss something?
No, that's it. So at the end, whenever we end up selling the inventory for each series, is when we'll end up closing out the note.
Okay.
So maybe before the 24 months,
Yeah.
right, the 2-year period, right? But if we're keeping inventory, then we're going to keep the note open. But it is a 24-month, 2-year note.
Okay. Is there any room to sort of stretch the note should ASIC prices not develop as expected and the yield be negative?
I would have to check with my legal team.
Okay.
I would imagine we probably could.
Yeah.
Right. But I really would have to look at how we structured the language in the note.
Yeah, no, it's very interesting. Can you share, James, what sort of, from the buyers of Series 1, what were the main reasons why they decided to buy it?
Are you talking about buying? The investors?
Yes.
Okay. Yeah. Well, investors who are sitting on Bitcoin right now, they're, other than just the Bitcoin appreciation, the price appreciation, they're not looking at any other way to create a yield, right? This gives them another way to create a yield above just the Bitcoin price appreciation, right? So if you believe in the thesis that we put together, it's a pretty safe investment if you're feeling like the ASICs are gonna outperform from an X factor, from the price increase over Bitcoin. So you learn more than just holding Bitcoin.
And I'm assuming those investors are typically not miners, because the miners that I've spoken to, they would all say, no, I prefer them hashing, obviously.
Well, we did consider buying the miners and putting them to work, right, and have them hashing. But after Adam and I really thought about it, I think having brand new machines that have not been hashing are going to be more valuable to people looking to purchase machines than machines that have been hashing for a year or a year and a half.
Okay. Yeah, I mean, it makes sense. Like one way I thought about it before was, from a miner's perspective, is maybe they would invest in it if they saw what their rigs were doing value-wise, but didn't have any more rack space available, right? So this would be an option to use maybe some of the quote-unquote hodl position that they have, to put that to work if they wanted to have more exposure to the industry that they very well understand, right? And make...
Yeah, well, it's also another way, Jesse, if you think about it. If you're an investor in the note, right, it's almost a way of a price protection for you. So if you invest in a note and the ASIC prices end up going up, you've made that yield on the note. So if you were to purchase miners, say in Q4 of 2024, you're going to be purchasing at a higher price, but it's offset by the profit you made by holding the note.
Yeah.
Right. So it's almost like a price protection on buying the more efficient ASICs.
Okay. So Series 2, James, is going to look exactly the same. What changes will you make compared to Series 1?
Series 2 is the opportunity still exists, right? ASIC prices have really not moved much, but Bitcoin price has, right? So the opportunity is very strong out there. So Series 2 is going to be pretty much the same thing. We may purchase different miner types. Again, and when we get to the point where we raise enough money to deploy, what we do is I generally talk to a lot of the industry brokers to see what kind of demand is out there and what people are purchasing, right? Just to make sure that we're holding inventory on units that are in high demand, right? And also I talk to folks in the industry to make sure that we don't have any issues with some of the manufacturer units, right? That they're well tested, and we're not going to have a bad batch that comes through, or we're holding a bad batch, and we won't see any issue. We won't see any problems with that until we sell them off a year and a half later. So it's through our relationships where we really have a lot of conversations with the brokers, the manufacturers, just the industry in general, and to figure out what kind of miners we'll purchase. So Series 2, it may not be the case. It may be the case. We don't know at this point. We'll worry about that in a few weeks when we raise enough money with Series 2.
Yeah, no, this is what I was alluding to earlier, right? By buying one model, in a year down the line, somewhere the industry realizes, oh, something was very wrong with these machines, or the failure rate goes sky high or whatever, and the ASIC might be below 25, but then there's always people are always talking and exchanging notes, and some people say, nah, these are absolutely fine. I've had zero bad experience. And others will tell you they have had 40% failure rate on model X, Y, and Z. And so it sort of changes the outlook. I really like the approach of combining across different models, right? Because it just makes it a more holistic package. I don't know, put some new Aurodyne machines in there, micro BTs, S19Ks, just to spread the risk. But then, as you said, it becomes more tricky to gauge what the series is worth, or what the individual package is worth.
The value is known at that point. Yeah, and we may do that. For Series 1, we did not, because we had an opportunity to actually piggyback on a larger purchase, right? Through working with one of the brokers to get the pricing that we want, right? So if we were to break up to multiple type of miners, then it's going to be a little more complicated to get to be able to get prices based on quantity.
How much marketing do you have to do for this? How quickly is this soaked up? Is there much more volume that you could do?
Well, we do marketing, and we work with Stoker, right, to promote it. And as long as the ASIC prices stay low, we'll continue opening up new series. So again, we're looking to do $5 million tranches, and when we get to that close to the 5 million mark, we'll close out Series 2, and we'll open up a new one, a Series 3. And we're expecting Series 3 would end up being available to U.S. investors as well, which opens up another whole pool of investors.
What's I can guess, but if you can explain to me what the difficulty is around offering this to U.S. investors, because I assume that's
well, we need because we don't have the licensing in Blockstream's organization, so we have to hire a firm to actually manage the note for us. Right, that's a broker dealer and have the proper licensing to do so. So we're in discussions with one firm right now to do that, and we just didn't have that done in time for Series 1 or Series 2.
All right. So essentially, but you're offering a financial product, so therefore you have to, I guess, follow all the laws. Yeah. No, a Stocker is available, I guess, to the rest of the world. I think they are based in Lithuania, if I'm not mistaken.
In Germany, yeah.
Yeah. That's interesting. You should have Stocker on here as well to sort of give their view. But yeah, what's the progress on Series 2 now? Where are you on the 5 million in percent? How much?
We still have quite a ways to go. I think we're less than $1 million at the current, but it actually moves quickly, right? Like for Series 1, we had one investor, which it was a very large investor, put a few million in. So it could bump up very quickly. So we're going to keep the series open for probably through March, just to keep have the ability for people to keep investing in it, because I think right now people are a little nervous with the halving, so it's Series 2 is going a little slower than Series 1, so we're probably going to keep it open a little longer.
You said this earlier, like a couple of months ago, were there a lot of parties that were financing ASICs where I could, if I didn't have the capital myself, wanted to build a farm where I could buy ASICs through somebody else with somebody else's money?
Well, yeah. Well, if you go back 2 years ago, there were quite a few firms out there that were offering financing that no longer offering financing, and some of them that some of you just put financing on pause for a bit. I think the market is teeing up for new financiers to come in because the ASIC market, the ASIC prices are so low. So if you're leveraging the ASIC as collateral, I think they're only going to go one way. It's the price is going to go up. So your collateral is going to be increasing over what happened in the past, where they went from $120 per terahash down to $10 per terahash. So you had a lot of, let's just say, a lot of margin call on your from your person financing it, which put a lot of people in some bad positions.
What mistakes do you think financiers of ASIC gear have to learn from this time around? What are the biggest sort of mistakes that were made from your, coming from your financial angle that you've had in previous career steps?
Well, I think a lot of people financing ASICs were financing at the height of the ASIC market, right? So using the ASIC as a collateral, when those prices tanked or dropped and followed Bitcoin down, then the value of the asset was much lower than the loan they had outstanding. So I don't think that is the case here because the ASIC prices, I feel, are very close to manufacturer cost. I don't know how much lower they can go. So, if you were to if somebody was to offer financing for ASICs now, I think the risk would be a lot less than what it was, let's just say, December of 2021 when the ASIC prices were way up.
On a larger scale, like the way I'm seeing this, James, is innovation in financial products, right? And just testing the waters to see what the appetite is. In 10 years, when, Bitcoin spot ETFs are an old hat and boring, and stuff like this becomes more, more sort of attractive to conservative outside of the industry investors. What does that do to the ASIC market, you think? Does it provide more transparency? Does it provide more clarity? Will we be able to buy ASICs 1 year out in futures? Because I think right now the maximum that I'm seeing is like June delivery. What are your thoughts on that?
I think as the industry matures, you're going to see the ASIC market mature as well, right? To date, you had primarily two manufacturers, Bitmain and MicroBT, that hold a large percentage of the market share, right? But as we're going forward, and Bitcoin mining is being accepted more from the general public, right? ETFs are helping with that as well, right? So Bitcoin is becoming more commonplace. I think you'll start seeing other manufacturers getting into the business, which should also create a little more transparency around the pricing and delivery as well. Now, I think the risk is what's happening in Taiwan, right? If that chip market gets constrained, then I think we're going to see a lot of issues, not just with Bitcoin mining ASICs. We're going to see with phones and everything, and everything else that requires a chip, right? So having some U.S. manufacturers in there could be a good play, and I think we're starting to see them pop up.
Yeah.
So it's gonna be an interesting market to watch over the next 2 years.
I like it. I mean, I like trying things out. It's I'd be curious to understand again what sort of the as this is very new, what the most sort of common comments are from investors who actually put their money where their mouth is, why they buy it. We said before, because they want to have exposure to a different Bitcoin derivative. What are some of the reasons that you see that people say like that they don't want to get into the Series 2, and what could be done about that?
Well, I think a common statement from folks that are that may become interested in it is, why don't I just buy and hold Bitcoin, right? There's less risk there, right? And it does have some validity behind it, right? But if you're buying and hold Bitcoin, you don't have the opportunity to make a profit above and beyond what Bitcoin will just yield you. So if you do have inventory of Bitcoin, right? Why not take a portion of that and do something else with it and take, it is going to be a little riskier, but you have an opportunity to make more money.
No, but look, if you just to philosophize a bit on this, right? Let's say Bitcoin was global money. Would that mean nobody makes investments anymore? No. I mean, you would make investments that you think
Exactly
provide more value or more monetary gain than just holding Bitcoin. And I agree. Like for most people, it's probably hard enough to keep those sats together in a wallet and not lose them. But it's very natural for people to want to do something with their money. I don't think that's going to go away. That's everybody's choice. I think we've had the same discussion around hash rate derivatives, right? Hash rate as a futures product, buying and selling that. There's always going to be counterparty risk involved as soon as your sats leave your wallet. But in an environment where Bitcoin is, the global base asset for money, we're not going to stop investing. We're still going to.
No, and I think the hash rate market is going to mature quite a bit as well, right? Where you're going to see mature marketplaces where you can buy and sell hash rate, where you already have let's just say the contracts or the legal T's and all the terms and conditions are already built into the description of joining the marketplace, so you can just basically buy and sell hash rate on the spot. Like today, it's a little more of a manual process. You have to find a supplier of hash rate, and then you have to go offline. Basically, you can get matched through some tools, but then you go offline and have to have a separate contract with those folks, and that could take a little time, right? To buy the hash rate from the supplier. So I think we'll see a lot more of that in the future, where it just becomes more commonplace and easier to buy and sell hash rate. Yeah. I'm excited to see that mature a bit. But yeah, to your point, is as long as there's other opportunity to invest, why not use your Bitcoin to try to make an additional yield above and beyond just holding Bitcoin?
Yeah, that's always going to be.
And the basic node is just one form of that.
Yeah, no, I'm rooting for it. I think it's a good play. It changes the way the ASIC market works. It changes the demand profile for it. Again, right now you can buy futures way below spot because everybody wants to sort of get their foot in the door, before the halving. But Bitcoin mining or Bitcoin in general always, I feel, benefits long-term thinking, right? And if you're working on a project that's live in August, why not secure the ASICs now, have those on your balance sheet and be able to sell them should things go south. Also, I mean, is there a way, James, to buy the basic node and take delivery of the ASICs myself?
I don't think we actually spoke about that internally, and I don't think that's what we're going to end up doing. So we're just going to end up selling them and then distributing the profit accordingly. Yeah, but I think if you think about the halving, I don't have all the statistics, but I do talk to quite a few folks. There's still a lot of machines out there that unless you're seeing a Bitcoin price above 65, that may not be profitable, right? So we may end up seeing a hash rate reduction, in the difficolty and so on. But this will either force people to upgrade their units, right, to more efficient machines, or it may just shut down. So I think we may see a dip in network hash rate for a period of time until those corrections can be made as well. But those who can afford to refresh machines are also going to create a new demand for the more efficient machines, which we expect to see. So I think we'll probably end up seeing that, if I was to guess, sometime in the summer.
There's so many.
Yeah.
There's so many moving parts. There's endless reports that you can read on where hash rate is going to go. S19s at 7 cents, 40% nonce analysis. at the end of the day, you got to focus on the factors that you can control, right? And I think M60s, anything below 25 will survive even at 7 cents if that's your chosen environment. And if you look worldwide for fully managed hosting, it doesn't really get much cheaper, right? Even in Ethiopia, you may be at 4.5 cents, 4.7, depending on volume. But then you have obviously a lot higher perceived risk. So, mining at 7 in the US, I think, is still very viable. But yeah, as you said, you want to be able to refresh, sell your machines on the secondary market somewhere maybe, or deliver them to higher risk jurisdictions where they can be plugged in and have another sort of run at it.
Exactly. And if Bitcoin goes over 100, let's say we're at 150, 200, people are going to be scrambling everywhere to get their hands on machines.
Yeah.
Every machine, M30s, whatever they can get their hands on, because it's going to be profitable.
What are your internal projections telling you around the halving? Where are we going to be? Have you guys, made those projections at all? Can you even say?
Well, yeah, Adam and I, we spoke about it. We would like to see it close to 100, but I think we're running out of time to get that high up unless we have some big jumps in the Bitcoin price. So I personally think that going into the halving, we probably can see somewhere around the 60 to 70,000 range for Bitcoin price.
And hash price?
And I think that I'm sorry, the Bitcoin price, 60 to 70,000, for Bitcoin, and I think that's kind of like the break-even point for a lot of the less efficient machines. So if we end up seeing that, if we end up seeing a $70,000 price for Bitcoin, then we may not see the drop in the hash rate that you may anticipate if the miners aren't profitable. So it's gonna be interesting to see what happens if price is below 70, and how much comes offline. But if it's above 70, I think people are just going to mine right through it.
Yeah, again, I'm looking at difficulty adjustments of plus 8%, and I'm thinking, Bitcoin price can be at 70, 80, 90K. It doesn't help you much if difficulty is gonna come after you.
Keep going.
You know what I mean? And
yeah,
I think the Luxa
a lot of elements driving this, right?
Exactly.
If we had a crystal ball, it'd be great. But we can just look at historically what it has done, and the growth on the difficulty. It looks like it's been running around 2%, but that could change, right? But
do you know where it's coming from? Where is all that hash rate coming from?
I think it has a lot to do with people upgrading to more efficient machines, right? So there's more hash rate out there, and plus, more recently, there's been more capacity on the market to plug machines in. So I think that's what we're seeing, and even new capacity coming on. So I don't see the difficulty slowing down unless Bitcoin. Bitcoin price drops to a point where it's no longer profitable to mine these less efficient machines, right? But if the price stays up there, we have new capacity to plug in. I think we'll just continue seeing the rate of what we've been seeing from a difficulty change.
I want to bring you guys back after the halving, James, and analyze all the mistakes we have just made in the last hour in our base assumptions, and how Bitcoin has proven us wrong once again. Is there anything?
Yeah, no, that would be an interesting conversation. Maybe talk a month after the halving, right? Yeah, because I think it's not going to happen like day one after the halving. There'll be a lag or a period of time, right? To see the change and depending on what the Bitcoin price is. But we're bullish on it, and we're expecting it to be upwards of the 70 plus mark, right? And by the end of the year, we'd love to see 100 out of it, 100,000 for Bitcoin price.
Yeah, no, that's Adam's goal, right? That's what he what he targeted. Yeah, interesting. Well, is there anything, James, that I haven't asked you that you wish I had covered?
No, this was, Jesse, it was a great conversation. I think if anybody, if any of your listeners want to know more about the Basic Note Series 2, feel free to reach out to me and/or just go to the Stoker page and they can register there, and we can have individual conversations with investors if they want to know more.
We'll link all of that in the show notes as well. Last but not least,
Correct.
James, does Bitcoin use enough energy? Yes or no? What do you think?
I think Bitcoin uses just the right amount of energy, right? So you can think about it. What it's doing for Texas is helping balancing the grid, right? You have a lot of these states that are not well balanced from a grid perspective. Look at California. California had some blackouts and so on, but even Texas, Texas had some high demand where you had Bitcoin miners able to shut down and give that capacity back to the grid, right? So they can service the homes and businesses, right? So I think being able to mine Bitcoin in some of these environments will help the suppliers, meet their demand. So I'd like to see other states, adopt very similar to what Texas has done, because I think it's very beneficial.
Sooner or later, that's coming to every jurisdiction where misallocation of capital has led to a lot of stranded capacity.
Well, it also gives a supplier the ability to, if the supplier actually gets into Bitcoin mining themselves, an energy supplier, it's a way for them to make a profit, right? So they can reinvest in more capacity.
Yeah, no, absolutely.
Right. So I think
absolutely.
So it's another added benefit to it. When I was on Wall Street running trading environments, we didn't just run a trading environment we didn't put out infrastructure just to meet capacity. We always went 2 or 3x the highest demand, right? So we didn't have any outages, right? But that comes at an expense. If you think about suppliers of energy, that having a 2 or 3x of this demand is very capital intensive. And one way to supply some capital to achieve that X factor on their peak demand is to Bitcoin mine.
Yeah, and there's nothing else really other than
Exactly.
government subsidies that at the end the consumer pays for. And I can only tell you from a German perspective, there's not much more room to do more of that, as you see industry leaving because of high power prices. Anyway, very well said, sir. Thank you very much for your time. Please, everybody, check out the Basic Note Stocker page Series 2. There's a nice dashboard there as well if you want to check how the Series 1 is performing right now. If you have any questions, as James said, please reach out. I really hope you learned something new. I will keep preparing now for Madeira, leaving with the family on Saturday. It's going to be a great time. Looking very much forward to the conference. If I meet you there and you have questions, oh no, I shouldn't even say that. This, I think, will be released afterwards. Anyway, I'll see you when I'll see you. I'll see you next Sunday when we talk mining again. And yeah, until then, bye-bye.